Asset acquisition transactions involving a REIT will require compliance with the SEBI REIT regulations. This means that not all assets can be acquired by a REIT. The asset will have to be tested against certain conditions. For example, investment conditions and the other eligibility criteria in terms of permitted investments will have to be kept in mind. And the REIT must be careful to not trip the 80-20 test. While structuring transactions of this nature, there are certain key elements that come up for consideration. For example, REITs often enter into right of first offer arrangements with the sponsor of the REIT. These typically happen at the time of formation of the REIT itself. It allows for expansion of the portfolio of the REIT and a lineup of assets which are available for the REIT to acquire in the future. ROFO arrangements are essentially related party transactions. This would mean additional compliance requirements from a valuation perspective because there are separate valuation guidelines for related party transactions under the REIT regulations. This could also mean that unit holder approval may be required depending on the nature of related party transaction. Another consideration that often comes up is that as part of their acquisition strategy, REITs may also acquire common area maintenance and property management businesses either separately or along with the asset. This would be subject to, again, the investment conditions and eligibility criteria, particularly the 80-20 test that REITs have to strictly comply with. For asset acquisitions by REIT, consideration may be payable in cash or in units. This would depend on, of course, tax considerations and liquidity requirements of the seller. A swap of units is looked at as a tax-neutral form of transfer. An important aspect while structuring REIT transactions is looking at the shareholder and co-investment arrangements very carefully. It's important to remember that the investment terms offered to other parties cannot be more favorable than those offered to the REIT itself. Similarly, the contractual rights that are entered into cannot be such that it prevents the REIT from undertaking its obligations under the SEBI REIT regulations. While equity transactions are more common, asset acquisitions by REITs are also funded by issue of debt securities. Unlike InvITs, REITs do not have direct access to financing from banks. While there are enough Grade A assets available in the market, better access to financing directly from banks to REITs could increase both transaction volumes and deal appetite.